Welcome to another Deep Dive, listeners. Today we're taking a closer look at Citaglobal Berhad, or CGB for short. We're going to try to figure out if they're worth your hard-earned investment dollars. Our sources today are their 2023 annual report and an interesting article about some infrastructure projects they recently landed. Now, we're not going to bore you with all the dry, technical details of financial statements. Instead, we'll be highlighting the most interesting and compelling insights. Basically, the things that can actually make or break your decision to invest in CGB. So think of this deep dive as a treasure hunt. Instead of gold doubloons, though, we're looking for profit potential.
Right. Always on the hunt for those profits.
Mhm.
Well, it seems like we might have struck gold with CGB. What's really interesting is they're not your typical one-trick pony. They're not just focused on one industry or sector. They're what's called a conglomerate, involved in energy, construction, property, and even manufacturing.
Conglomerates. I'm always a little bit skeptical about them. Sometimes it seems like they're spreading themselves too thin, trying to do too much. So is that diversity a strength for CGB, or is it just going to hold them back?
That's a great question, and one that a lot of investors ask about conglomerates. To get a clearer picture, maybe we should break down their portfolio a bit.
Yeah.
So, starting with your energy business, they have their roots in oil and gas. But, and this is where it gets interesting, they're really pushing toward renewable energy sources. We're talking about solar projects, battery storage, and even carbon capture. Looks like they're really trying to ride that wave of the future.
Yeah, like full-on diving headfirst into the future, not just dipping their toes in the water. But how serious are they about this move into renewables? I mean, are they just trying to generate positive headlines, or are they really committing to this transition?
Well, their annual report actually goes into some detail about this. They've signed some pretty serious memoranda of understanding, MOUs as they're called, for some really big solar projects. And get this, they're even involved in a first-of-its-kind battery storage project in Malaysia. This is definitely more than just talk. They're putting their money where their mouth is.
Right, so actions speak louder than words,
Yeah.
as they say. And it sounds like they're making some big bets on the future of energy.
Yeah.
But it's interesting that they're still involved in oil and gas as well. I mean, is that a good thing? Is that smart? Almost like they're hedging their bets, trying to have the best of both worlds.
Yeah, I see what you mean. It's a classic diversification strategy, though, not putting all their eggs in one basket.
Yeah.
Now, moving on to their construction business, specifically their civil engineering and construction arm, or CEC. They have a pretty long and successful history of winning large infrastructure projects. In fact, that article you mentioned, it talks about a 51 million ringgit project they won in Sarawak. Involves some river wall and other infrastructure work. It's a significant win for them.
Definitely sounds impressive, 51 million ringgit. But, big wins don't always mean big profits. I'm curious to see how this diversity we've been talking about, how it all impacts their bottom line.
Right, it's all about the profits at the end of the day. Well, looking at their 2023 financials, things actually get pretty interesting. So first, the not-so-great news. Their revenue decreased by 4% from 2022 to 2023.
A decrease in revenue. Not exactly a glowing endorsement of the diverse portfolio strategy.
Yeah, no, it doesn't sound great on the surface. But hold on to your hats, because here's the twist. Their profit before tax in 2023, it completely turned around from a 39.8 million ringgit loss the year before to a 13.8 million ringgit profit.
Wow, hold on, that's a massive swing. From a huge loss to a decent profit. How do they pull that off?
Well, it's not magic or anything. It's really a result of some pretty strategic moves within the company. The real stars of the show were their CEC division, that construction business we just talked about, and what they call their remaining segments, which includes their telecommunications business, among other things. Those two segments performed so well that they actually offset some losses in their manufacturing, energy, and property divisions.
Right, so it's almost like some parts of the business are booming, while others are lagging behind. This diversification strategy we've been talking about, it really is a double-edged sword, isn't it? I mean, on the one hand, it cushions the blow when one area struggles. But then on the other hand, it can also drag down the overall performance if those lagging segments don't turn around.
You've got it. And that's why it's so important for investors to look beyond just that overall profit figure and really dive deep into how each segment is performing. There's also another factor to keep in mind. In 2022, they had to impair some goodwill related to one of their acquisitions. It was Citaglobal Engineering Services, I believe. And that played a role in their losses that year. So Yeah, it's not always as simple as just looking at the top-level numbers.
Right, the deeper you dig, the more complex it gets.
Yeah.
I can definitely see why investors might be a bit wary of conglomerates. It's kind of like trying to solve a puzzle, but the pieces are from like 5 different boxes.
Haha. Yeah, I can see that analogy. But hey, stick with us. We'll try to help you sort through all those puzzle pieces and see if there's a complete picture there.
Okay, so their financials are, well, a mixed bag, I guess. Some bright spots, some shadows lurking around. But before we get too deep into those numbers, I think we need to talk about the risks involved with investing in CGB. Because every investment has risks. And CGB, especially being involved in so many different sectors, they must have a whole laundry list of things that could go wrong.
Oh, you're definitely not wrong about that. Their annual report actually highlights a bunch of key risks that we should consider. So, for example, one of the big ones is construction delays, which in their line of work can be a real nightmare. They also talk about the rising costs of raw materials and, well, those pesky inflationary pressures we've all been dealing with. Those are factors they can't really control, but they can definitely impact their profits.
For sure, those are major concerns, especially for a company so heavily involved in construction and manufacturing, because delays and cost overruns, they can really eat into profits.
Couldn't agree more. But the good news is that they're not just sitting around hoping for the best. They're actually trying to get ahead of these challenges with some specific risk mitigation strategies.
Okay, so tell me more about these strategies. What's their plan of attack?
Well, for those construction delays we talked about, they're really focusing on closely monitoring their projects and also on coming up with innovative ways to streamline their processes. And of course, better communication within the construction division is always a key factor to prevent those pesky cost overruns. They're also trying to refine how they monitor their projects, and they're also working hard to improve their product offerings, making sure they align with what the market actually wants. So basically, they're trying to become more efficient and more competitive in every way they can.
Right, so it's a two-pronged approach then.
Yeah.
Manage what they can control internally and be ready to adapt to those external pressures. Makes sense. But what about cybersecurity? I mean, it seems like every company is a potential target these days.
Oh, absolutely. And CGB acknowledges that risk in their report. They really emphasize the need for strong data protection measures. And then, of course, there are the challenges related to climate change and the whole global energy transition.
Right. Which is interesting, actually, because we just talked about their big push towards renewable energy. It's almost like they're acknowledging that their own success in that area could actually contribute to the very problem they're trying to solve.
It's definitely a complex issue with a lot of layers. And to their credit, it seems like they're very aware of the potential for negative public perception. They even mention the possibility of facing backlash from communities regarding their sustainability initiatives.
Yeah, it sounds like they're walking a tightrope for sure. But let's maybe shift gears a little bit and talk about what gives them a competitive edge in the market. I mean, they must have something going for them beyond just being in multiple businesses, right? What really makes them stand out from the crowd?
Well, their diversification, which we've been talking about quite a bit, as much as it's a risk, it can also be a strength. It gives them a wider safety net, and opens up a lot more potential avenues for growth.
So back to that double-edged sword again.
Exactly. Another key thing they're banking on is their strategic focus on renewable energy. They're hoping to become a major player in that whole sector as it continues to grow.
Yeah, and that makes a lot of sense considering the global shift towards green energy. But are they just riding the wave, or is they bringing something truly unique to the table?
Well, what's interesting is they claim to have a first mover advantage in the Malaysian market for battery energy storage systems, or BESS as they're called. They even unveiled a locally produced 1 megawatt BESS prototype through a joint venture they're involved in.
Wow, so they're not just talking about it, they're actually building it. That's impressive.
Yeah, it does suggest they're pretty serious about innovating in this space. And let's not forget their solid track record of winning those big infrastructure projects, like the one we discussed earlier. That definitely says something about their ability to compete and deliver on their promises.
Right, success breeds confidence, right?
Yeah,
It's got to give them some credibility in the market.
absolutely. And lastly, they place a really strong emphasis on customer satisfaction, which can be a huge advantage in the long run.
Right, so they want to be the good guys, the reliable partners.
Right.
The company that goes the extra mile for their clients. I like that approach. But does it actually lead to tangible results? Does it really pay off?
Now, that's a question we'll have to explore as we dig deeper into their financials and how they're performing in the market.
Okay, sounds good. I'm definitely ready to keep digging. It feels like we've only just scratched the surface here. So stay tuned, listeners, because we have a lot more to uncover about CGB. We'll be back soon with more insights and analysis. All right, so we've kind of set the stage here. We have a good idea of what CGB's business looks like, how diverse it is, and those big ambitions they have in renewable energy. Now, I think it's time to get down to brass tacks, really look at the numbers. Our listeners want to know if CGB is a smart investment, so let's put those financial statements under the microscope, especially their recent performance in Q3 2024.
Yeah, makes sense to look at the most recent numbers, but there's a slight snag. We don't have their full Q3 2024 report yet. It's still December, remember?
Ah, right, of course. Always waiting for those reports to come out. But it's not like we're completely in the dark, are we?
No, definitely not. We have some breadcrumbs to follow. We've got their 2023 annual report for one. And remember that news article about their infrastructure projects? Those can give us some pretty good clues.
Right, like those big projects they secured earlier this year. I'm thinking of that huge Riverwall project in Sarawak, 51 million ringgit, if I remember correctly. So even without the full Q3 report, can we assume it's going to be a pretty good quarter for them? I mean, that project alone has to boost their revenue, right?
It's a pretty safe bet, yeah. That project will definitely be a major contributor to their revenue. Plus, don't forget, they have a bunch of projects from previous years that are still ongoing and generating revenue.
Right, right. So the money's flowing in, but the question is, how much of it sticks around? What about their profit margins? Especially in those key growth areas they keep talking about.
Well, their 2023 report shows some interesting things about their profit margins. It's really a mixed bag depending on which segment you're looking at. For example, their CEC division, that construction business, they have a really healthy margin there. But then you look at their manufacturing segment and, well, they're actually operating at a loss.
So it's like a seesaw, up and down. Some parts doing really well, others struggling to stay afloat. So I guess what you're saying is their overall Q3 profit margin is going to depend on which segments are performing well.
Yeah, exactly. And that's why it's so crucial to look at the individual segments, not just the overall picture. We need those detailed breakdowns to really understand what's driving their profitability.
Makes sense. So we've talked about revenue, profit margins, but we can't forget about the other side of the coin. The liabilities, the debts. Remember those big numbers for bank loans and trade financing we saw in their annual report? Those were pretty eye-catching, to say the least.
Oh, yeah, I remember those. And you're right, they were significant. But to be fair, those kinds of liabilities are pretty normal for a company like CGB. They're involved in these massive projects, so they need financing to make it all happen.
Right, that makes sense. But how can we know if they're handling that debt responsibly? Is there a magic formula or something we can use?
Not exactly a magic formula, but there are some really helpful financial ratios we can use to understand their debt situation. For example, there's the debt-to-equity ratio. That basically tells you how much debt they're using compared to their equity. If that ratio is too high, well, that could be a sign of potential risk.
So it's like checking their credit score, but for a company.
Hmm.
Interesting. What about their ability to actually pay back those debts, though? Are they generating enough cash flow to cover all those interest payments?
That's where the interest coverage ratio comes in. It tells us how easily they can make those interest payments with their earnings. A healthy ratio means they're in a good position, they can handle their debt load.
Right, so it's not just about the size of the debt, it's also about their ability to manage it. I get it. But where do we find these ratios? Are they buried somewhere in their financial reports?
You can actually calculate them yourself. All the information you need is right there in their financial statements. It's a great exercise for any investor, really. Helps you understand the company's financial health.
Okay, good to know. Maybe I'll add calculate those ratios to my to-do list. So even without the complete Q3 report, it seems like we're starting to get a decent grasp of their financial stability. But let's look ahead a bit now. What about their future growth? What opportunities are out there for CGB? We already talked about their big plans in renewable energy, but are there any other areas where they could expand?
They do outline a few key growth areas in their annual report. One that stands out is their plan to expand their operations in Southeast Asia. They're looking to capitalize on all the infrastructure development happening in that region.
Yeah, it makes sense. They've proven they can get things done in Malaysia, so why not take that expertise elsewhere? But is Southeast Asia really a golden opportunity, or is it more of a risky gamble?
There are always risks involved, of course, but CGB seems to believe there's a lot of potential there. They're also really focused on those high-growth segments within their existing portfolio.
Right, like their telecommunications business, that one that's kind of tucked away in the remaining segments category.
Exactly. They had a really strong year in 2023, so they're looking to build on that success and expand aggressively.
Smart move. Ride that wave while it's still up.
Yeah.
Anything else they have up their sleeve?
Well, they're also actively looking for strategic partnerships and even acquisitions that could bring in new companies or technologies that would allow them to diversify even more, or maybe gain a foothold in some new and exciting markets.
Wow, so they're not just sitting back and waiting for things to happen. They're out there making moves. It's a bold strategy, but is it the right one?
That's the question every investor has to ask themselves. We've covered a lot of ground here, from their financial performance to their ambitious growth plans. But what does it all mean for someone who's thinking about investing in CGB? Let's try to distill it down to some actionable insights, things investors can really use.
Okay, yes, that's exactly what I need. Help me connect the dots here. What are the key takeaways? What should investors be focusing on?
All right, so first and foremost, it's important to remember that CGB is a company in transition. They're moving away from those traditional sectors like oil and gas and embracing those newer, higher growth areas like renewables and telecommunications.
So what you're saying is investors need to decide if they believe in CGB's ability to make that transition successful, right?
Yeah, it's a bet on their ability to transform themselves. Their 2023 performance was encouraging, but the transition is still ongoing. Investors need to keep a close eye on how they're progressing in these new areas. Are they actually securing those big renewable energy projects? Are they making headway in that battery storage market? Those are the signs to look for.
Okay, so track their progress. But what about their financials? What should raise red flags for investors?
Well, they did manage to swing back to profitability, which is impressive, but it's crucial to keep analyzing their financial statements. Don't forget about those liabilities we discussed. Investors need to really dig deep, calculate those key ratios, and make sure CGB is managing its debt responsibly.
All right, don't get blinded by those profit figures. You got to look under the hood and see how the engine is running. What else should we be looking at?
Their risk mitigation strategies. Remember all those challenges we talked about, like construction delays, rising costs, cybersecurity threats, even potential backlash from communities. Investors need to assess how CGB is tackling those issues. Are they being proactive, or are they just reacting to problems as they arise? Do their strategies seem well thought out and effective?
So it's not just about identifying the risks. It's also about judging how well they can handle them. Makes sense. And what about that focus on customer satisfaction they keep talking about? Is that just a marketing tactic, or is it a real competitive advantage?
Well, their emphasis on customer satisfaction and engaging with communities, it could actually be a sign of their long-term vision. Companies that prioritize those things tend to build stronger brands and more loyal customer bases, and that can translate into sustainable growth over time.
Right, so it could be a sign that they're building a business that can weather any storm and thrive in the long run. It's a lot to take in, but it feels like we're finally starting to understand the CGB puzzle.
Yeah, we're getting there, but remember, this is just the beginning of your own research.
Right. We've given you the map, but now it's your turn to go treasure hunting. You have all the tools and knowledge to really dig into their financials, analyze their performance, and form your own conclusions.
And don't forget, stay informed about what's happening with the company. Keep up with their announcements, read those industry reports, keep your finger on the pulse. The more you know, the better decisions you can make.
Okay, so we've covered a lot of ground here, but there's still more to come. Stick with us for the final part of this deep dive. We'll wrap things up and leave you with some final food for thought. All right, welcome back, everyone. Back to our deep dive into the world of Citaglobal Berhad. It's been quite a journey, hasn't it? We've explored their diverse business, their financial performance, the risks they face, and those exciting opportunities they're chasing. Feels like we've covered a lot of ground.
Yeah, we've definitely uncovered a lot about CGB. It's clear they're a complex company, ambitious too, and operating in an environment that's constantly changing. Makes for a pretty interesting case study, I'd say, for any investor.
Absolutely. But now I want to pick your brain a little bit, get your expert opinion. We've dissected their past, looked at where they stand today. But what about the future? Considering everything we've learned about CGB, do you think they're well positioned for long-term growth? I mean, that's the big question, right? That's what investors really want to know.
Yeah, that's the million-dollar question for sure. And honestly, there's no easy answer, no crystal ball to tell us what the future holds. I mean, think about it. CGB is operating in a world that's full of uncertainty. You've got those global economic shifts happening, the energy transition that's still unfolding, and all those geopolitical risks that are always lurking around the corner. It's a complex equation with a lot of variables.
So how do we even begin to assess their long-term prospects? What are the key things that investors should be watching for? What separates the winners from the losers in this kind of environment?
Well, one of the most critical things is their ability to execute that renewable energy strategy. Talk is cheap, right? We need to see concrete action, actual progress.
Right. So what kind of progress are we talking about specifically?
Well, for example, are they securing those large-scale solar projects they've been talking about? Are they really making strides in that battery energy storage market with that prototype they unveiled? Those are the things that will tell us if they're truly committed to this transition.
So it's not just about jumping on the renewable bandwagon. It's about proving they can steer it. Yeah.
Exactly. And then there's their expansion beyond Malaysia. Southeast Asia is a big opportunity for growth, but it's not a sure thing.
Right. It's a gamble in a way.
Yeah, it is. So we need to see evidence that they can replicate their success in new markets. Are they winning contracts in those target countries? Are they building strong partnerships? Are they navigating the regulatory landscape effectively? Those are the things that will determine if the regional expansion is a success or a flop.
Okay, so track their progress in renewables, keep an eye on their Southeast Asia strategy, but what about their core business, their financials? What kind of warning signs should investors be looking for?
Well, their financial performance is always going to be under scrutiny. Are they maintaining those healthy profit margins? And even more importantly, are they managing their debt responsibly? Remember those ratios we talked about, like debt to equity and interest coverage? Those are crucial indicators of their financial health and sustainability.
So investors need to keep a close eye on those numbers.
Absolutely. Any red flags there, and it might be time to proceed with caution.
Right, because past performance doesn't always guarantee future success. Investors need to see consistent strength, not just a one-time blip. So track their progress, watch their financials, anything else.
One more thing, and it's maybe the most important of all, their ability to adapt and innovate. I mean, the world is changing so fast. Technology is evolving. Markets are shifting. Companies that can't keep up, well, they're going to get left behind.
So what are we looking for here? How do we know if they're keeping up?
We need to see that they're embracing new technologies, anticipating those market shifts. They can't be complacent. They need to be constantly evolving, experimenting, pushing the boundaries.
Wow, that's a lot to ask.
Yeah.
Sound like investing in CGB is not for the faint of heart.
Yeah.
It takes careful analysis, constant vigilance, a willingness to accept both the risks and the rewards.
You nailed it. Investing is a journey, not a destination. It's about doing your homework, making informed decisions, learning and adapting along the way. And remember, we've only scratched the surface here. This deep dive is just the starting point for your own exploration of CGB.
Right, we've given you the map, but now it's time for you to go on that treasure hunt. You have the tools and the knowledge to delve deeper, analyze those financial statements, and draw your own conclusions.
And stay curious. Keep learning about the company. Follow their announcements. Read industry reports. Keep your finger on the pulse.
All right, some great advice there. Well, that brings us to the end of our deep dive into Citaglobal Berhad. Hope you found it insightful, maybe even a little bit thought-provoking.
Yeah, and if you have any more questions or if you want to share your own thoughts, we'd love to hear from you. You can visit our website or connect with us on social media.
Great. Always love to hear from our listeners. And until next time, happy investing, everyone.